Welcome everyone. If you're just joining us, welcome to Mosaic Project first webinar since the pandemic for entrepreneurs. My name is Annie Mbale and I will be your webmaster today. But before we go deep into the presentations and hear from our presenters, I would like our executive director to welcome you and give a little bit overview of the Mosaic Project.
Can everybody see my presentation? Okay, great. Good morning, everybody. I'm Suzanne Sierra. I'm the Executive Director of the St. Louis Mosaic Project. We are part of, and everybody that you'll hear from today is part of the Regional Economic Development Agency called the St. Louis Economic Development Partnership. We are all collectively working to strengthen the St. Louis City and the county by helping businesses come to St. Louis, stay in St. Louis, grow in St. Louis, and in that way we grow our economy. There are several divisions within the partnership. You'll hear today from the team that works on our business finance initiatives. The World Trade Center of St. Louis is the international economic development arm for the partnership, and Mosaic is an initiative within the partnership. And we were started in 2012 after an economic study that showed that we were really lagging in the number of immigrants in St. Louis. The study looked at our peer cities, about a dozen peer cities that were similar in size to St. Louis, that were growing. And we wanted to know what did they have that we were missing, and it was immigration. And you can see the statistics on the screen that at one time we were a large metro, and we ranked much higher in foreign born, and we are now 23, and our population, our native population, continues to decline, and the foreign born population continues to grow. Between 22 and 23, in fact, St. Louis ranked number one among the top 30 metros for foreign born growth. And, we love to see that trend line. Since then, we have decreased the number of immigrants somewhat, but the gains in the immigrant population continue to offset the declines from the native born. And so our focus, the mission of St. Louis Mosaic Project, is to maintain St. Louis as a top destination for foreign-born talent. And we do that by building a welcoming region together in collaboration with the business community, civic partners, economic development partners, and the broader St. Louis population. So our goals are to retain the talent and the entrepreneurs that are here as a way to drive population and economic growth. We are, at the end of the day, we are connectors. We're a small team of two. And what we do is for any foreign-born individual who arrives in St. Louis, whether they've come here as the spouse of an executive that was transferred with another company, if they've come as an international student, or if they've come as an entrepreneur to start a business or to grow a business, we are the first stop and a resource to help them connect with the ecosystem that can help them grow, put down roots, and stay in St. Louis. And so our, strategies are to, again, be sort of a one-stop shop to connect folks to the kind of resources and mentors that they need. And then we really spend a lot of time advancing the narrative about the economic impact of immigrants and small business owners and entrepreneurs in the region. You can see here that immigrants pay quite a lot in taxes. The spending power is in the billions. And we have 11,000, more than 11,000 immigrant entrepreneurs that are not only starting businesses here, but then creating jobs as well. And so we do, our job is to really make sure to get that information out there. This is just a one sheet glance at our programs. We are, again, connectors. There's no cost to participate in these programs. And so we invite you to visit our website, which you can get here from the hopefully that QR code works. But I wanted to just give you a context of why we do what we do. And hopefully those of you who are joining us today will take away something that's helpful for you, for your business, or to share it with other businesses that you might know when you hear from our presenters now. Thank you.
Thank you so much, Suzanne. Before we go to our speakers, I just wanted to give you a few house rules. All participants will be muted for the duration of the presentation. However, if you wish to ask questions, please do so by using the Q&A button at the bottom of your screen. We will do our best to get to those questions at the end of the formal discussion. The slides and the recording of this presentation will be available days after this webinar is completed. And today's speakers, like Suzanne mentioned, they're from our own organization. I will not read their bio, they will introduce themselves, but Dale Scott, who is the Vice President of Business Finance from St. Louis Economic Development Partnership, and we have Zach Falk, who is also Business Development Officer for our Business Finance Department, and we also have Corinne Melville, who is a Small Business Development Manager and SBDC Business Counselor. So Dale and Zach and Corinne, take it from here.
Thank you.
And I have to share your slides. Can everybody see that?
Yes, we can. And good morning, everyone. This will be a brief overview of talking about getting ready for business financing. And we'll be talking about how you get your bank ready and give an idea as to what banks and lenders look for in terms of financing. Next slide, please. And as I said, it's going to be basically an overview of the financing options. And next slide. So there are various types of financing that's available out there. There is term loans, and those are loans that are basically either are fixed or variable rates. They can be used for a number of things. They can be used for fixed assets. They can be used for real estate. There is lines of credit. The lines of credit are basically designed, for example, they can be used for seasonality of your business. They can be used for utilize your receivables with a line of credit for working capital and other things that you might need for your business. The SBA loan program, there are two different types that we primarily we know about is the 7A, and which is basically typically is a variable rate and can be used for a number of things. It can be used for fixed assets, and also it can be used for inventory and furniture and fixtures. The 504 is another one the one that we handle in-house here, that is designed for real estate purchases for a business that's going to be housing their business, and also for heavy equipment. And it'd be that program, Zach will be talking about that later, is that is a fixed rate for a number of years, up to 25 years. There is invoice financing, otherwise known as asset-based lending, and that's based on the time frame is when a business might be expecting to be paid. And typically a bank will look at that and saying, okay, we will lend you based on your receivables that's shown on your balance sheet. They will lend you either based on the 30-day term, 60-day term, 90-day terms. Typically a bank will not utilize any receivable that's over 90 days old. Business credit card. A lot of business get started using business credit card debt and personal debt. That's one way to do it, but the problem with that, though, is the fact is if you don't pay it off in the original 30 days that you typically give with a credit card debt, you're looking at a massive interest rate that's a lot higher than bank financing. Merchant cash advances is similar to lines of credit in a way that merchants will give you will do an advancement based on your receivables or your work in progress, your contracts that you might have outstanding. Personal loans. A lot of people get started with getting loans from their friends and family. I that the thing about that though is I would recommend if you do something like that, you draw up a contract between that person so that you know that everything's spelled out as to when they're going to get paid and so forth. Micro lending. That's typically some places like it can be like the SBA has a micro lending program. Other places have micro lending programs as well. And they can be used for, like I said, a number of things. They can be used for working capital and a number of other items. Next slide, please. What we look at is we look at your financials, your business and personal financial statements. Typically, if it's a existing business, usually banks wants to look at 2 to 3 years of financial statements and sometimes the interim. Banks sometimes will look at year over year. They'll like this, for example, if May, they might look at May of 26, but they also want to look at May of 25 because they want to see if what happens is comparable from year over year. See whether or not there's any jumps or seasonality in what's happening in your business. Schedule current debts. That's they want to see, okay, what kind of debt you have right now. What are the terms on that? They look at your credit reports. They want to see how good how you managing your credit. That if there's an issue, that can be a red flag. But sometimes a bank will say, okay, there's a story behind how your numbers are not looking well, so you can be able to tell that story. It could be in case of a personal issues. It could be a case like for example, you had high medical bills, and you had maxed out credit cards and things like that. So that's a one-time occurrence. I mean, if there's a story behind the numbers, the bank sometimes will take that in consideration. Projections. Banks sometimes want to look at projections. If, for example, if you're starting out new, they want at least 2 to 3 years of projections, and you have to be able to tell the story behind those numbers. You have to be able to say how you put those numbers together. The structure, they want to look at what kind of collateral that's available, whether it's real estate, if you're buying a building, or if it's equipment, if you're buying equipment. Sometimes a bank will take furniture and fixtures if it's brand new. They want to know the structure of your business. They want to know whether or not you have the capacity or the ability to manage this business. If you're new, you're starting out new, you have to be able to say how you're going to be able to differentiate yourself from somebody else. Okay, you might be a case, for example, that okay, you have no experience, but you're bringing on somebody who has experience in the industry, so that could help negate the issue for a bank, the concern for a bank in terms of okay, you have no knowledge of this industry that you're entering, and that this is how you're able to mitigate that potential risk. Business plan. They want to see how you mapped out everything in terms of how you're going to be able to manage the business. Whether what's going to go into how you decide to run this business. Have you thought it out? Have you done market research? Have you invested in people who may have experience or something that's going to show that you've thought out this process of how you're running this business. Like I said, managerial experience, length of time, it always looks good if you've been around in a business for a while. And like I said, are you able, like I said before, able to mitigate the fact that you have no experience by bringing in somebody who has knowledge of that industry that you're into? I mean, it could be a case, for example, you're buying a business, but you're keeping on the existing owner as a consultant to help you transition from not knowing about the business to learning. So you're learning about the business from the person who has the experience. Market. It's always good to have. We utilize RMA sometimes. Industry analysis. You want to see how your competitors. They want to know how you stack up against your competitors in terms of okay, are there too many people? Are there too many industries or businesses like you close to each other? How are you going to be able to separate yourself from somebody else? So that's a theory. And also trends. They want to know about the market trends. Is that industry going up or is it going down? Is it being affected by, for example, a lot of businesses are being affected by rising gas prices right now. How are you going to be able to get your raw materials? Where are you going to get that? Do you have distribution contracts if you need that? So there are a lot of things that they variables that they a bank will look into, see whether or not you don't try to mitigate that potential risk. Next slide. And this is Zach.
Yeah, good morning, everybody. I'm going to get into the parts of the underwriting, how we make our decisions for a loan approval or decline. I'm a pretty big nerd, and I love getting into all of the small little details. And one of my favorite parts of the job is that, to be a business owner, you have to be kind of a nerd about your business. You're so much of a nerd that you put your entire livelihood on the line to do your business. So I want to talk about kind of how we make decisions, how you can prep your business to apply for financing, and really get into the details of how everything works in a loan application. Next slide, please. So one of the first things we always talk about is credit reports. So I get a lot of questions on if for a credit score, like what is the minimum required credit score to get approval for a loan? Kind of as Daryl said, it depends. So when we look at a credit report, both for the personal and the business, we're trying to take into understanding the overall story behind something. So I've worked with somebody in the past who had a low credit score, but it was because they had a unfortunate medical emergency that caused them to take on a good amount of debt and have to declare bankruptcy. They had to put a lot of things on pause in their life to deal with that medical emergency. They were able to overcome it, and then now are looking to expand their business. So, understanding that part of it is important. So, I've got a breakdown here of kind of what is in a personal credit report. You Big thing on it is payment history. Then the amounts owed on credit cards and other debt. That's actually really important too to know because that is broken down by percentage of what is used on credit cards. So it's a good thing to have a large credit card limit that you can spend up to as long as you're not spending a ton of that. Typically, you want to keep it below 30% each month to maximize your ability to use that score. Your length of credit history is really important. You want to have an average score that, the ideal is above 10 years. Obviously, you have to take up that time using credit to get to that point. But having those different things open will extend that average length of credit history. And then having multiple different types. So not having only just credit cards, having other kinds of debt is helpful to improving your overall credit score. With the business credit score, it kind of depends on a couple different things. They're looked at different, not only than a personal credit score, but also pretty different depending on the business that you're in. A lot of businesses will look at trade lines for their credit scores, but not a lot of businesses have trade lines on for the type of business that they operate. So it kind of changes depending on that. The big thing to look for are those 5 items that are here on the slide. So no tax liens, judgments, lawsuits, collections, or bankruptcies for the business. The score is kind of iffy depending on your type of business, but those 5 things are really important and what we look for looking at the various different things for the business credit score. Next slide, please. So improving your credit, a couple things you can do. First of all, making sure your payments are always on time. It's done by a percentage of your payments. So your that 35% overall of your credit score will be done by how much payments you make correctly. So if you have a lot of different payments, years and years and years of many different payments each month, and you miss one payment, that's going to put you down to 99% of on-time payments, which doesn't affect your credit score as much. Whereas if you do not have that much debt and you don't make regular payments on things, so if you have, a single year of payments for one debt item, and you miss one of those payments, that's a 10% hit on your overall payments being made. It's also really important to check for errors on your credit report. I always recommend people get things like Credit Karma or go through their banks to have regular updates to their credit scores. Because there is a lot of issues that people have prior to applying for any debt that they have issues that they need to dispute on their credit score that isn't reflective of themselves, since something may be misreported to one of the three credit agencies. Um, Make sure you reduce your debt, making sure that you're in that below 30% range on your credit cards or other revolving payments. That's super helpful. And then, biggest thing you can do, it's not necessarily the best when you're trying to go for financing at the time, but waiting may be the option that you have as far as improving your credit score. So, any sort of credit inquiries that you get last on your credit score or credit report for 2 years until they're removed, and then bankruptcies can last up to 10 years. So, having just regular payments consistently will improve your credit score, but sometimes waiting to get that application for a loan or something like that may be your best option there. Next slide, please. So one of the biggest things we look at is, does your business cash flow? You've probably heard this a lot, but I want to break it down to what we mean by that for analysis from a banker. There's a particular ratio called the debt service coverage ratio. And basically all that is you take your bottom line net operating income and you divide it by your annual debt obligation. So how much you pay towards debt in any given year. And this includes whatever loan that you're applying for. So we're looking at your past performance to determine what your future ability will be to pay back the debt. What we want to see in that ratio is typically banks will look at 1.2, 1.25, or higher for that ratio. So that means that your net operating income is at least 25% above what your annual debt obligations are. With kind of what we do for SBA loans, we're looking at either a 1-to-1 or typically we want a 1.1, so 10% above your annual debt obligations. With that, we can also look at your overall global cash flow. So if you have other businesses or if you have other forms of revenues that you're going to be utilizing to support your business, we can include that in our analysis to overall build in a better picture of your financial standing, especially if you're a startup and you're utilizing your own personal income to support the business. That's what we would include in that sort of option. So, next slide, please. Other things we look at. So I kind of, if we can go back. Um, Other things we look at. So this is kind of broken down into four different sections. So liquidity means how much cash do you have on hand to support the operations of your business. These are various ratios that I don't want to get into all the little math part of it to kind of let you or to give you too much information as far as each of this, but to kind of summarize each of them. But so yeah, liquidity is what you have cash on hand to support the operations of your business. Activity, not all businesses are going to have this, so not everybody has receivables or payables or even inventory, depending if you're a service business. But we want to understand really with your business, how long does it take you to get paid and how often are you getting paid? So we will look at those items to help determine that. Leverage, we want to understand how much you're making versus how much you are actually, or how much debt you are taking on. So we want to understand your tangible net worth for the business. So your assets minus your liabilities, making sure that's positive. So you have assets to support the debt that you're taking on. Understanding that your business is actually growing in equity and value for the amount of debt that you're taking on. So that debt to equity ratio. And I've kind of already talked about the debt service coverage ratio. And then overall profitability. Your operating margins are super important because any adjustment in kind of, as Daryl said, talking about increasing costs. So say something with like gas prices, tariffs, or even just wages, anything that could increase your overall cost will reduce your margins. And understanding that you may be able to increase prices or anything like that to adjust for those decreasing margins so that you're able to afford any potential increase in your business overall. And then understanding how your assets, your sales, and your equity actually works for you and your business, that you're utilizing your resources as best as you can to help your business continue to grow. Next slide, please. Collateral, very important. When we're making a loan, we're basically placing a bet on your business that is saying that we bet that you're going to be successful and pay us back so that way we get our money back and we can lend it out to other people. With that said, sometimes businesses do not pan out. Sometimes they do fail. So what we do as lenders is take collateral on to help mitigate that risk. So, a lot of different loan programs we work with have built-in collateral. So equipment or real estate we can use to help make us whole again after the loan goes into default and in that unfortunate circumstance. So we were able to, and there's a couple bit of different types of collateral here on the slide that you could utilize for applying for a loan. A lot of times in startup loans, we even will have to take a lien on a personal residence or something like that, or an investment property to help secure that loan. So that way we can make sure that we're not only making a good bet, but making a safe bet on a business. Other things that is important, so understanding a succession plan, in having that in place to make sure that if one of the business owners were to pass away, that there is somebody who, or even retire, there's somebody who will take on the business after that to keep the loan going and keep payments going towards the loan. And then understanding insurance requirements too. Sometimes a business fail because of a unfortunate circumstance, whether it be with weather or different things like that. So we have insurance requirements in place to help protect both the business and the loan to being paid in case an unfortunate circumstance happens. Next slide, please. And then Daryl talked a bit about business plans too. These are a couple items that would be in a business plan. So understanding what you're doing. I mean, it's really the who, what, when, where, and why. Making sure that you have all of those outlined, making sure that if you're putting together financial projections, that they're reflected in your business plan. Because if you're going to hire on 10 people and that's not reflected in your projections for how much wages you're going to be paying out, that needs to be able to match. Ultimately, in a business plan, as I talked about, we're all kind of a bit nerds in this situation. You're more nerdy about your business than I would know. So, what we're looking for is that you've thought things through and that you have reasonable assumptions with your business plan and in a way that you will be able to succeed in what you're doing. Next slide, please. And again, kind of talking about projections, understanding what assumptions need to be put in there as far as what your expected expenses are, and then also how you're going to make revenues. Understanding what you are doing to increase your future revenues, understanding that if the growth is sustainable, so understanding your current market, like how many people are going to be utilizing your services. If you're expecting a certain amount of revenues, and there are only a certain amount of people in the market who will utilize your services, making sure that you have enough to hit that number. The more specific you can get about your assumptions and where you get those numbers are going to be better for us as underwriters for your loan. Next slide, please. So when preparing for a financial or for any sort of loan or any financing for your business, these are kind of the 4 pieces of advice that I can give for you all. One, make sure you run a credit report. Understand what's on your credit report, review your financials, make sure you know what your business is doing and what your personal credit score looks like. 2, make sure that you have your documents organized and prepared so that way when the bank asks for them for the financing, you can easily supply them. Make sure you're ready to go even kind of as you're prepping to ask the bank for financing. The quicker you can obtain them, the quicker the application goes. I've always heard the advice that time kills deals. So anything you can do to make it go quicker will probably help your overall financing chances. Um, Understanding lenders' qualifications and requirements, having that initial conversation with bankers, and even understanding or building up a relationship with bankers prior to even when you need financing is really important because then they can give you a better idea of if you're going to qualify for certain things that you need for your business. And then you can also shop around for the best deal. If you have a really good business and are able to get financing pretty confidently, you can go to different places and see who can give you a better interest rate. And then finally, be proactive and be realistic. Um, Setting realistic goals for what you can obtain is important, but also setting realistic timelines is super important. Everything takes longer than you think it's going to be. That's kind of a universal truth. So being able to set that is really important as you're going through your application. Next slide, please. And then I'm going to pass it over back to Daryl to talk about what we do. You're on mute, Daryl.
There we go. Sorry about that. Before we get into that, I just want to say a few things that we didn't touch upon. A lot of banks will look at what's called the 5 C's of credit, and that is character, capacity, which is cash flow, capital conditions, and collateral. When they're talking about character, they want to know if you're trustworthy, your credibility, and they like to lend to people who are responsible and keep commitments. When they talk about cash flow, Zach talked about that. That's your ability to repay the loan. Lenders want to be assured that your business is going to generate enough cash flow to repay the loan that they're giving you. When you're talking about capital, they want to know, what are you putting into the deal? I mean, banks like it more when there's shared risk, that you're putting something in, as they call the skin in the game with them. So that's one thing that banks will look at is, okay, are you putting anything into this deal as well? Conditions, they want to know, whether or not your business is growing and faltering, and what are the factors that's impacting that, how your growth, you're growing fast. Okay, what is that sustainable? I mean, is it because you've tapped into a new clientele base or something like that? So those are things that the bank will look at as well. And the other thing is collateral. What are you putting up in terms of this deal? I mean, it could be real estate. It could be like I said, equipment. It could be, in some cases, it might be a second on your house. And one thing I will also say to you is that when you're getting the business, you want to keep that business. You want to form it, either a corporation or LLC. You don't want that business in your name. You're trying to limit your liability. So you want that liability in the name of the business first, instead of yourself. And then also, don't commingle funds, which means don't take money out of your till and not account for it. So that's something you also want to do. You keep your personal finances separate from your business finances. And okay, we talk about what we do. Next slide, please. So the business finance division is divided into basically 3 parts. It's the St. Louis County Industrial Development Authority, IDA, and that deals with bond issuance. And that could be municipal bonds tied to manufacturing, tax-exempt bonds tied to low-income housing, 501 C3 projects, and also special tax districts. We also oversee the St. Louis Partnership CDC, and that is basically, as Zach talked about, we handle the SBA 504 loans for anywhere in St. Louis County. And actually, the St. Louis Partnership CDC actually can go anywhere in Missouri. And Zach did a deal outside of Kansas City a couple years ago. And we can go to 8 counties connecting over in Illinois as well. And Zach talked about what that is. Basically, that's tied to the 504 is tied to whether or not you're buying real estate that's going to house your business, and it is typically 51% for a business that's more than 2 years in existence. It is still 60%, Zach, for anyone less than 2 years.
It would be, sorry, say that again.
60% if your business is less than 2 years old. But you have I believe it's 3 years to reach that plateau.
It's 80%. Well,
Oh,
no,
perfect.
it's 80% occupancy if not about your business being but if it's new construction.
Right. Okay. Yeah.
Yeah.
And so you can rent out part of your real estate, but the thing about that is it cannot be included into the cost or into the financing of the SBA project. We also handle the small business loan program for the city, and typically that is designed for a business that's been denied traditional loans either by a bank or credit union. They can come to us and we have our loan program is typically $30,000 to $150,000. There are cases we've gone beyond that, and we actually do work with startups. And that money can be used for equipment, it can be used for inventory, it can be working capital, and it can be used in conjunction with a bank loan. For example, you might be doing a bank loan for equipment or real estate, and the bank might say, "Hey, we're only going to give you 70% of the value." We can utilize some remaining equity to give you additional funds to get you to the finish line. And the same thing we do with the St. Louis Local Development Company. We handle the SBA 504 requests for St. Louis City, and then we also manage several small business loan programs for St. Louis City, which run from the same thing, $30,000 to $150,000, and we have gone beyond that threshold as well. Next slide, please. And as I said before, this is what the IDA consists of: manufacturing, 501c3, special tax districts, and all low-income housing. We're really excited because one of them that's just broken ground is 174 units going up by UMSL. It's right there by the Metrolink. So that's a project that's really going to help to revitalize the area. And also right near that, we approved 60 townhomes to being renovated right there at 2600 Lucas and Hunt. So these are two projects that are very close to each other, and we're very thrilled about that. Last year, we saw 190 units going online in Wellston, and that has started the revitalization of Wellston, because now McBride Homes is doing 174 single-family units in Wellston as well. So we're very thrilled. We're all about helping to revitalize areas, job retention, and job creation. And it's like I said, we talked about what we do for the LDC also. Next slide, please. Now I'll turn it over to Colleen.
Okay, that took 3 clicks on my microphone to make that go off. I'm sorry about that. Hello, everyone. I'm Colleen Mulvihill. I'm your Missouri Small Business Development Center, or SBDC, business counselor. I work with these fine people at the St. Louis Economic Development Partnership, where we really have so many different resources for you. So I wanted to go over some of these resources that we offer through SBDC and how we all kind of work together to help you advance your business, start your business, grow, etc. So no, go ahead, next slide, Annie. So what is the Missouri SBDC? We do serve we have a statewide network of counselors with different specialties, and we serve all 114 counties, and the city of St. Louis. We're funded in part through a cooperative agreement, and that's with the Small Business Administration, or the SBA. And we get the additional funding to offer so many of these resources that are at no cost to you, which I can kind of review in a moment. We do like our state headquarters is at the University of Missouri Business Extension Office. And then we have counselors spread out throughout the state at different economic development organizations, universities, etc. Next. What we do. Did we miss one? Yeah, go back one. I only have a few slides here. So what we strive to do is, as SBDC counselors, is to help you make confident decisions. And we do that with personalized assistance. So we do that with one-on-one business counseling. And we offer a lot of different training events on topics that are hopefully, very relevant to you. That's what we strive to do. And I want to give you the links so that you can register with SBDC St. Louis, as well as view our training programs that are coming up in our calendar of events. And I'll be sure to share that with you before we're done. So we do serve the for-profit business community, and from startup, idea stage, wherever you are in your entrepreneurial journey, we can meet you there, and we can help you with some of these different things, especially the items that Zach and Daryl went over. So many times folks will get to our finance people maybe before they're quite ready for applying for that loan. So I work a lot with clients on building that business plan and connecting you. Again, we're so much about connecting you to different resources. So I really work hard to stay up to date on what different programs are available within our entrepreneurial community. We have an amazing community, and I encourage you to connect with as many of different support organizations like ours that you can. So I do that, of course, one-on-one, as far as, kind of matching you up with different resources that might be helpful for you, maybe industry specific type resources. I know that someone mentioned accelerators and incubators. So through the St. Louis Economic Development Partnership, we do have an incubator program. We have 4 physical facilities that are business incubators. And depending on what your business is and what type of space you need, will determine if that would be a fit for you. So we can definitely talk about that as well. Accelerators are a different animal. And again, I am very familiar with many of the accelerators in our community, and aware of, I try to keep up with, like, okay, you're not ready for this accelerator. Maybe let's work on, getting you started and generating revenue and being in that position to say, yeah, now I'm ready for, one of the accelerators that I'm thinking of, for instance, is Arch Grants, which is the top of the line, right? It's like, those are rather growing and advanced companies, but there's some other ones that you might definitely, qualify for if you're just getting started. So we can talk about that. One of the accelerators I work closely with is the Schnucks Accelerator, which is fantastic because it is obviously, consumer goods products. And so if you have a product that you believe would be a good candidate to be on the shelves of Schnucks, then we can talk about how you might best get approved to be welcomed into a cohort with Schnucks. I work as a coach for their cohorts, so I have a little bit of an insider idea of what they're looking for. So that's kind of in a nutshell what we do as far as overall one-on-one counseling and, kind of group training sessions. Many of the training options are at no cost to you, and most of them are. So again, I would encourage you to go look at my topics coming up and seeing what might be a good fit for you. In fact, if I don't mind, if I won't get in trouble here for plugging, even tomorrow I have a LinkedIn webinar that is at no cost to you, and I have a LinkedIn expert Her name is Kathy Bernard. She's really excellent at helping you really maximize your free LinkedIn profile. And we're going to have 3 sessions with her covering different topics. So again, just kind of keeping up with our calendar would be great. Also, kind of getting back to what kind of services, I don't want to miss any of my important bullet points here. We even offer expertise in different areas. So we have like counselors that are dedicated to technology. We have our import counselor that is an expert in helping businesses, and you might have run across her already. And then we also have the Apex counselors that we work closely with, and they help with doing business with the government. So lots of different avenues and resources that I would love to get you connected with. Go ahead, Annie. So I kind of probably covered most of this, but getting kind of, more specific, again, the business planning, getting you prepared to go in front of that loan analyst. And I work closely like with Zach and Daryl and really, kind of understand what they're looking for before you, hit submit on that application. So a lot of other options are when you're working with me is, marketing planning, strategic planning, research and industry information I can connect you to. Again, government contracting, the training. I can also help with site selection. If you are looking for a new location for your business, within the business development division of the partnership, we can, kind of run a search for you based on the criteria of, square footage and location and different things like that. And again, the business incubators. So I'd love to have a conversation with all of you, any of you, and see what resources are available for you. And the next slide. That's it. So, thank you, Annie, for sharing that. So in your chat is links to my upcoming trainings, and they're actually a whole, calendar from across the state. So some of them you might notice they're out of St. Louis region, but some of them are virtual. So if it is virtual, of course, you're welcome. Thanks, everyone.
Thank you so much, Corinne, Zach, and Daryl. Like I mentioned earlier, if you have any questions, please make sure that you can put the questions in the Q&A. I know that some of the questions have already been addressed by Suzanne and Zach. Hold on. And just a reminder, we're gonna send the PowerPoints and the recording to this presentation to everybody that registered, and their contact information as well. So if you have any questions for Zach or Dale or Corinne, you want to follow up, I'll share that contact information with you as well. At this point, there is no questions in the queue, and oh, hold on, there is questions. Okay. Do you have a section that handles listing of business for sales in the area and can connect interested buyer? I don't know if that question is for Corinne or Zach. I've just
From my position, we do not have that, but I often will lead clients to the Biz Buy Sell website that does have, those listed. So, I mean, that it's not connected to us or promoted by us or anything, but that's a good place to start, I think. And Zach and Daryl might have other suggestions.
Yeah, I would say we don't necessarily have a specific list or anything like that, so that would probably be their best bet.
Yeah, I agree. And we do deal with business brokers from time to time, and that I'd be happy to, so I can put a list of those people together as well.
Colleen, can you include in the chat the the link to the reference that you made, the buy biz? I didn't catch that.
Sure.
Thank you.
And the next question is, are the SBDC program sessions and services offerings free or paid? I think you did talk about that, but
Yeah, so the one-on-one counseling is at no cost. And see, again, most of our training offerings are at no cost. The only time you might see a price on a training would be if the region that is offering it maybe is hiring a subject matter expert that's leading it. So, but many of our presenters are doing some pro bono for us, so it's usually at no cost to our clients. And then as far as the startup stage, can definitely help with your business planning and getting you prepared for that financing maybe that you're looking for.
so that's the question from Yarid, right? That's what you were saying. Okay, so I can skip that. Okay.
I didn't mean to jump in there on you.
No, I'm glad you did. And the next question is, I'm in the restaurant business and like to expand. Who do I need to contact?
They can contact me. I'd be happy to talk to them.
Okay, so contact Dell, and I'll share their contact information.
Yeah, I'd love. Yeah, feel free to contact both of us because I'd love to be connected as well to help you with your expansion.
I would like to also add, again, just to reinforce that we're all under the same umbrella. We work for different divisions of the partnership, but we are all focused on, again, providing this information, giving you access to resources. For the question earlier about a foreign-born non-US citizen and funding and all that, yes, there are restrictions that were changed with the SBA, but there are lots of other sources, including we have an African Immigrant Chamber of Commerce, a Hispanic Chamber of Commerce, an Asian Chamber of Commerce, where you can find a lot of business owners and perhaps look for collaboration or ways that maybe there's a way they could help fund you, but there are other ways that we can connect you to communities and to some microloan programs and things like that that could help. So really, I think it's just a place to start, and it's all very based on what your needs are too. There's not one size fits all per se.
Thanks, Annie. I shared that BizBuySell URL in the chat.
Yeah, I just put it in the chat to everyone else, so they should be able to see that.
Okay, thanks.
Yeah, and we have 5 minutes to go, so if there's any other questions, we'll take it. Otherwise, we'll give you your 5 minutes back. Thank you everybody for being here today. We are planning to do these webinars every 3 months, so keep an eye out to our newsletters and our events page on our website as well. Mosaic has an event page where we curate and also put our Mosaic events, internal events up there. So keep an eye out. And I just wanted to say thank you to Zach, Dale, and Corinne for being here and for giving this presentation. I think it was needed. And if you have any questions, please feel free to reach out to any of us. If we don't have the answer, we'll find the answer for you. Again, thank you so much for being here.
Thanks, everyone.
Thanks for coming, everyone. Thanks, Zach, Colleen, and Scott.
Absolutely. Thank you for having me.
Oh, it looks like there's one more question here.
Oh, okay. We can take that. So to access the sessions, do I need to join the program or can I attend individual sessions? I'm specifically interested in the importation session.
As far as the SBDC training offerings, at that site that we did link to, I think, right? Yeah, Annie shared it for me. That's the individual sessions. You don't have to sign up for for business counseling to go to one session. You can just register for whatever training options you would like.
Okay. Thank
That
you.
would be great, Marie. Thank you.
Thank you so much, everyone. And I just have to find the stop recording button.